Welcome back to the Finance Forum with myself, Abdu-Raof Hanslo, and this week we're speaking retirement annuities and the top-up season. My guest in studio, Mohammed Jaffer from OJAF Financial Services, and just before the break we unpacked exactly the importance of retirement annuities and also the benefits given to us by our government as a gift for retirement. Mohammed, we really got into the crux of things before the break.
Yeah, Abdullah, what I just wanted to add maybe is that when we get to retirement, a lot of people say, yes, but I'm going to be taxed later on. We must understand, say for argument's sake, you're a senior corporate executive, you're earning 60, 70, 100,000, whatever it is per month. You'll obviously fall into the 40% tax bracket. Very, very few people, as we know, and we're talking less than 4% of people can retire financially, and that percentage is even smaller when we look at how many of those people get 75% of their salary at the retirement. A very, very small percentage. So obviously our tax rate is going to drop significantly when we get into retirement. So that money then gets taxed at a lower rate, and we can even be more clever. And what we can do is we can split our incomes between our wife, between spouses, and your tax rate can even reduce even further.
On average.
And this is part of your financial planning as you plan your financials going forward.
Yeah. Now you know, Mohammed, for the benefit of the viewers, top-up season. Before we go into anything else, I think. Just a quick synopsis of exactly what that means and what a top-up is. So as far as contributions during the year and what happens in February.
Very important question, Abdu-Raof. Yes, what happens is that we have up to the 28th of February to take advantage of this top-up, of this, because that's when the financial year ends for the government, for Treasury. So we have till the 28th of February of every year to top up our retirement savings. Now, Abdu-Raof, as I said right at the beginning, that unfortunately South Africans leave everything for the last minute. So what we find in our practice is that we get a flood of people wanting to contribute to their retirement savings, retirement annuities in that last week. And there's only so much, and then there's thicker stuff that needs to be supplied, and then sometimes the necessary documentation is not readily available. And then unfortunately we had situations where people missed the date. Now, because you need to verify the amount must be paid reflecting the investment company's bank account on a certain date, and also they need to have the necessary documentation and those types in order to process it. And if you do get in the documentation after the fact, it becomes very difficult. Something that could take us normally an hour, 2 hours, can take us literally weeks. In fact, we had a situation that literally took months to reconcile and get. So it's important that the viewers take advantage of this opportunity and take advantage of it timelessly.
So a quick calculation there. If let's say I've contributed 10% over the last year to my retirement annuity, what could I top up with, Mohammed?
You've got another 17.5% that you can top up your retirement savings by, Abdu-Raof.
Okay. Now coming to that also, as far as benefits for retirement are concerned, retirement annuities are obviously not the only product that can be used for saving for retirement. There are other products that the government gives concessions on. Could you speak us around some of those products?
As we touched on it, there's the pension funds, and we know that pension funds works exactly the same as retirement annuities at retirement. And then we've got the provident funds, and we certainly hope that the legislation around provident funds will change come 1st of March 2018. That's when they've moved it out. And then all retirement products are going to become the same. Abdu-Raof, when you leave your place of employ, don't access your pension or provident fund. Transfer it into what we call a preservation fund. So the full amount gets transferred into a preservation fund, and the full benefit is carried over. If you're going to take anything more than 2,750, you're going to be taxed on it in full. and you lose that full benefit.
Yeah.
All right. So transfer it into a preservation fund and leave it until you reach the age of 55 or older. Then, Abdu-Raof, what the government then started last year, they brought out a product called a tax-free savings product. Now, there's a distinct difference between a retirement annuity and a tax-free investment. The retirement annuity is pre-tax money. You get the tax benefit of it.
Yeah.
Retirement tax-free savings or tax-free investments is after-tax money. So the benefit with tax-free investments is basically that your investment is not subject to any interest tax, to any capital gains tax, any dividend tax.
So that's going forward. That's going forward. So from the date that you invest, there won't be any taxes imposed on that.
Correct. That's right. Yes. Yeah. So which means that your investment is basically tax-free. The environment in which the investment is placed is tax-free. However, the government has put a cap on it because obviously you find that it's normally those that have that takes advantage of these things.
Yeah.
So they've said that you can put up to 500,000 rands of it in your lifetime. You can invest in a tax-free savings or tax-free investment, limited to 30,000 per annum and limited to 2,500 rands per month. So, but now the benefit here again, Abdu-Raof, if you've got the husband and wife and 3 kids, you can do the same on each person's name. So you can spread it, over the entire family. The other thing is also with tax-free investments, you have access to the money. All right, it's not as rigid as a retirement annuity where you don't have access to the money at all. So we have access to the money. However, it doesn't turn the clock back. So say, for instance, if you invested up to 200,000 into a tax-free investment, you take out 100,000. That doesn't mean now your 500,000, you'll go back to 400,000. No, you still only have 300,000 left, Abdu-Raof. So that's when it comes to your tax-free investments that you can also take advantage of. And that also runs up to the 28th of February that you can use to top up.
And there's no term limitations to that moment. So, I mean, basically, it's not said that that can only be for 5 years or 10 years. You can basically start at 20 and end at 60.
Exactly. You can do it for 5 years, 10 years, whatever, if you use the unit trust products.
Yeah.
These are very flexible products.
So, just to get a little bit more info on that, is there a maximum quantity you can invest per year, per annum?
Yeah.
And is there any specific cap on growth over a specific period?
No, these are the figures that I mentioned earlier on. You have 500,000 of your lifetime maximum that you can put in there. Per annum, the maximum amount that you can put in is 30,000 rands per person and 2,500 rands per month. Now, for you to take full advantage of this, Abdu-Raof, is when you put your money into these investments, is to make use of maybe property unit trusts. And seek out those property unit trusts that are geared towards dividend income. Now there are lots of property unit trusts, but very, very few of them are geared towards dividend income. Most of them are geared towards dividend income and capital growth. More capital growth and dividend income. All right. So it's important that your advisors seek out those that gives you the dividend income, because that's where you are going after, because that's going to be tax-free in your investment. So it's important that your underlying investment then, Abdu-Raof, is analyzed and you invest in the correct dividend yielding investments within your tax-free investment.
Now, Mohammed, over the last few years, I mean, if I think back 20 years ago, these types of products and even retirement annuities didn't have the benefits it has today to society as far as tax breaks are concerned, as far as non-tax paying is concerned. So looking forward, obviously it's progressed very nicely over this last 2 decades. Looking forward, is there more light down the tunnel? Are we looking at a situation whereby these breaks are going to increase to benefit our communities?
Yeah, look, there were always some sort of benefits in the past, but I think what they've done is over the last few years is they have simplified the calculations to determine certain benefits, and also the tax rate at which these products are taxed and things. They've simplified a lot of these things, and they've made it easier for us as the ordinary person to understand and also to take advantage of Abdu-Raof. So yes, going forward, I'm sure, like as I said, and you mentioned the fact that a couple of years ago, the tax-free amount that you could take out of your pension products was 300,000. They upped it to 500,000. So these changes happens all the time, Abdu-Raof. We don't know what the budget speech holds for us. I'm not too hopeful for many tax breaks, but these things happen all the time. Now, Abdu-Raof, before time catches up with us, there are other things that we can, as high net worth individuals, can take advantage of, and that is donations tax. Within the year, you can donate 100,000 rands to your children or to any public benefit organization that is registered appropriately and get the tax benefit for it. You can donate to your spouse any amount, and then your spouse can then donate to any of its children again. Be careful if you want to, and there is a 20% tax break, because if you're going to go over that amount, you're going to be taxed at 20% on the amount, donations tax. Be careful that we don't make use of our children below the age of 18 to donate to. Because if you're going to donate to anybody under the age of 18, it's going to come back to the donor. So it's going to be added back to your
taxable
income. So you're not going to get the benefit.
Mohammed, I think we've covered a lot in this program, and it's, as you started out in saying, it's very seldom we see gifts given to us by our government, by South Africa, and this for one is a gift. Basically, it's something that will definitely benefit us going down the line. Also, going forward, it's a safeguard to protect our future and the future of our children and our offspring. At the same time, in saying that, our propagation from Finance Forum is always to seek financial advice to the viewer. So in this, specifically in this regard, it's quite a complex issue. And we encourage our viewers, obviously, to seek financial advice from a certified financial planner or advisor. You've been watching the Finance Forum with myself, Abdu-Raof Hanslo, and my special guest in studio, Mr. Mohammed Jaffer from Mojaf Financial Services. And this was a program specifically telling you about the gifts given to you by our South African government as far as tax breaks are concerned in retirement funding. Until next time, stay focused to your finances.